How's everyone doing here today? We are coming live in person. First in person, Meghan and myself, Patterson GPS Conference in DC, right outside of DC.
Yeah, Baltimore.
National Harbor. Really excited. Got to speak to a lot of great individuals, individuals looking to start a practice, expand a practice, build a practice. A lot of good conversation, a lot of good excitement, I think, in industry, a lot of good movement that we're seeing. Come with a quick hitter today. We had like 10, 15 minutes, quick hitter. We just wrapped up our Q2 planning season.
Loved it.
Q2, we dive deep into your numbers. We're doing benchmarking KPIs and getting a sense of operational improvements that could be made within the practice. Heading into Q3, we're going to do a lot of tax planning. There's a big, beautiful bill that could be passed here that could drastically shake up the landscape of what tax planning looks like at the end of 2025. But I think, Meghan, what are we seeing? What are we seeing in industry right now? What are the numbers that we're looking at? The trends, the goods, the bads?
I think we're doing okay. I think we're doing better than we were at the beginning of the year, right? Everyone was so scared. Price of eggs had got up. We weren't sure what was happening with the government.
How much is the price of like carton of eggs?
I don't know. In Houston, it's like $3.50.
I feel like they're like $5. Anyways.
This might date ourselves, right? Who knows what the price of eggs are now. But I think that people are starting to come back into practice. We're seeing more dentals being done. Preventative wellness, I think, is taken kind of front and center, right? Like, those are the things that we can recall. Hey, you're due for your vaccines while you're here. Do you want to do some blood work? Do you want to get a dental? Those kind of things. And so I think we're seeing that kind of come back in now.
Sure. What do we focus on, though? So outside of just balance sheet, profit and loss, which are critical, there's some data we can gather from the PIMS, I think. What are your thoughts around average client transaction, lapsing, how that revenue matrix, how should we be looking at that on how that's broken up?
I think we forget about these lapsing clients, right? We see that there's new clients coming in because we're paying attention to that number. That's an easy one to look at every month. Oh, I've got 30 new clients. Great. I'm doing fine. But those lapsing patients we kind of don't check on. And that's really that low-hanging fruit. If we can get them at 14, 16 months, right when they're just kind of being overdue, I think that's an easier way. It's easier to keep your clients and get new ones.
Sure.
So I would like to focus on that. Average client transaction is always very important, right? Keep an eye on your doctors, keep an eye on your associates, keep an eye on your staff. Are we making the right recommendations? Do that blood work, get that vaccine. How are you doing on preventatives? All of those kind of conversations add up and kind of attribute to your ACT.
ACT, and we're trying to see that in the range of what, 3.5 to 4 times your exam fee?
Correct. And I think that's fair. We had this conversation with the group here, and somebody said, well, what does that mean for emergency or urgent care? And I kind of see it's the same, right? Because if your emergency or urgent care, your exam fee is going to be more expensive, so your ACT is going to be more expensive. So it's just still kind of ball in line.
That makes sense. That makes a lot of sense. I think, just focusing solely on balance sheet items, assets, what you have, liabilities, what you owe, equity, what you've created. We're very focused on the asset section, making sure you have enough working capital, staying power, money in bank. Traditionally, like 2 to 3 months of operating capital at all times. That's going to change based on the operator. But again, in uncertain times with a little bit of revenue growth or lack of revenue growth there, you want to make sure it's flat, which is okay. But what we don't have is margin compression where revenue is flat. Our COGS, our people cost, all our general and admin expenses continue to rise. That's when our EBITDA, that normalized earnings, really suffer. So just being mindful of it, right? I don't think there's any panic. There's no panic that should be had. I think every quarter, every month gives us an opportunity to analyze, to assess where we're at, to pivot if needed, and use the following quarter to kind of redirect.
I do think we've gotten away, or we need to get away from that kind of 10% across the board increase,
Sure.
Quarter after quarter or twice a year, right? The industry can't support a 20% increase from January to December. Your clients are feeling that. So I think strategic kind of raising prices is smart. I go through a lot of price lists and I say, you guys are not charging enough for enemas. This stuff is gross. Like, charge more for that. But things like inducing emesis, those things are always way underpriced. Lab work, like, I understand it's a numbers game, right? So we either need to have a price point that everyone's going to say yes to or a price point that kind of covers our margin. So kind of go either way depending on how you're selling it. Dentals, I like making an affordable dental for those animals to get in sooner so that you're not seeing all those trash baths at the end that are costing you, thousands of dollars and losing double digits of teeth. Like, if we get them in sooner, that's kind of important. I also think that I really loved Q2 planning.
Sure.
Like, it was super. I came from a practice, right? I had a CPA. He was a great guy. I would talk to him once a year and he'd say, make these journal entries, pay this franchise tax. And I'd be like, all right, we're good. So these Q2 calls are like important for me too, to have these conversations. We're talking to some people that have never had any kind of guidance, any kind of anyone looking over their shoulder, looking at their numbers with them saying, hey, this is good. And I think we need to celebrate. There's a lot of good going on at our practices. And I think it's really important. So many people are like, I don't know how I'm doing, right? And they're all accountant were like, you're doing fine. The lights are on. Like, but Q2 conversations were such a deeper dive and I felt it. I loved it.
Sure. And I think the excitement for us is we do break our year into seasons. So we have our tax return season, the compliance. We have the operational management number side of it in Q2. And as we pivot and heading to Q3, I mean, that's tax planning season. That is where surely the money is saved. And like I mentioned to start this episode, big, beautiful bill, if it's passed, when it's passed, there's going to be tax law changes. There has to be, because a lot of provisions that came about in 2018, 2019 are sunsetting at the end of this year. So we're going to see changes of some sort. I hate being vague. I hate saying I don't know, but you really don't right now. We don't know the best way to strategize for year end because there's so much uncertainty in the tax landscape, which is also fine. We have plenty of runway heading into July here. Be mindful. Let's put a plan in place based on what we know, the law in effect. Be mindful of some of the provisions that are discussed and talked about, and then use Q4 to reassess. By Q4, we will absolutely know what that tax landscape looks like. If anything will be retroactive back to 1/1 of 2025, or if it will all come and play into 2026. We're seeing a lot of expansions, renovations, just changing to the footprint. We're big fans and talk a lot here about cost segregation studies. I think that should always be top of mind when you're doing anything within your building, whether it's a leasehold or owner-occupied property. The thought there is if you're going to put greater than 200 and 250 grand into your practice, renovations, improvements, anything like that, cost segregation studies should always be top of mind. From our perspective, it allows accelerated depreciation, the cost recovery of you spending money, so you don't have to wait 15 to 39 years to recover that cost of the $300,000 addition you put on the back of your practice. It gets majority, 20 to 30% historically, 20 to 30% in year one, tax deductible. So again, that drastically changes what that all looks like.
And I think it's important to know you guys aren't supposed to know this stuff, right?
Yeah.
That's what we're here for.
My big thing is, regardless, we don't need you to recite tax code. Why? Because it could be a little dry and stuffy at times, but we do want you to understand the levers that we're pulling, the reasons why you should be spending a little bit of money at year end, not just emptying the checkbook. I think some of the worst advice you can get is empty the checkbook.
We all know that 179. We don't really know what it means.
What is 179?
Every vendor comes to you at the end of the year and says, 179, buy this.
Well, guess what? The only way to get 179 is to spend money. So let's do it methodically. 179 is a tax deduction. Tax deductions are not a dollar for dollar reduction of your tax. So the hypothetical 35% effective tax rate, I go out and spend $10,000. My tax bill does not come down by $10,000. It is not a dollar for dollar offset. You spend $10,000, your tax bill comes down by $3,500. The net cost of whatever you just purchased, $6,500. So it is clearly a savings, but we got to be mindful. We got to know what is our effective tax rate. As you spend money, always know what effective tax rate you're in. Why? Because if I'm on the 35%, but I'm accelerating deduction, spending more, and it pushes me into a 22% bracket. Do I want to be there? Do I want to be in a 22% bracket? So I'm spending that same $10,000, only yielding a $2,200 tax savings. You want to spend money as we creep up into the tax brackets that we currently have.
Well, I'm all about spending money, but we got to spend it smart, right?
Spend smart. Do we straddle tax years? Do we spend some 12, 15, 2025, and we purchase the rest 1/2/2026? Again, not just making your tax decisions solely focused on what's in front of you, what you're looking at for the next month to 3 months. You got to give yourself a little runway here. Go out 12 to 24. Can't predict the future, but at least you can strategize, you can plan for it. Try to be anticipate where you're headed. The worst thing I think we could be is reactionary. The coulda, woulda, shoulda. Looking at your tax, I wish I did spend a little bit more money at year end. The other thing we chatted about yesterday was method of accounting. Accrual versus cash. That's critical to know because your financial statements, your internal statements, to be on the accrual method of accounting. What that means, accrual method, is you perform a service, client hasn't paid you yet, it's still revenue because you performed the service. I receive an invoice from a vendor. I haven't paid it yet, but because I received the invoice, it's in accounts payable, it's an expense. Cash method, the flip is you have to get paid and then pay someone. So money's in, money's out. We prefer the cash method from a tax return standpoint. If I can control my cash, I can dictate my profitability. So understanding your method of accounting is critical there. Preferring the cash method of accounting from a tax perspective. Accrual method is fine from a internal financial statement standpoint. So we truly have a better sense of monies that we owe vendors over time, proper cutoffs, all of that. The cash method, though, is going to give us a ton of flexibility to pull those year-end levers, really manage the brackets that you're going to be in.
I have an accountant that I historically just talk to you once a year. What should I be doing in these last third, fourth quarters to kind of make sure that I'm on track? How can they guide the conversation for successful?
Again, ask questions. What questions can you ask is, do you understand the numbers? Do you understand not what your net income is, what your taxable income is? Because again, those could be two wildly different numbers. You got to know what your taxable income looks to be, what effective tax rate at the individual level that you are in. And if I know what my taxable income is and I know what my effective tax rate is going to be, we can start to strategize. Am I in the right bracket that I want to be for year end and looking ahead to 2026?
So,
Not bad. Not bad. It's a quick hitter. Quick hitter today. We got to get back to the GPS Patterson Conference here. Wrapping up day, what are we in, 3? It's been a lot.
I don't know what
It's been a lot, but it's been an outstanding opportunity. Very thankful and grateful for the entire Patterson team for having us down here in DC. Looking forward to future events with them. And as always, appreciate you listening.
Thank you.